Shopify has been absolutely murdered over the last 4 months, coming down as much as 80%. And just today, it was down as much as another 15% intraday. As of this recording, it's down 12% on the day. And I'm going to get into some reasons as to why that is just for today's movement. But does this make Shopify a buy in the long term? And is it a safe stock to buy now, just given how much this has come down? I mean, given the fact that in 4 short months, this has come down from $1,700 highs all the way down to 510, it's got to be a buy, right? We've seen a small little bounce here all the way up to around $800, and now it's pulled back to 689. Does this make this attractive? And I'm not quite sure, but we're going to dive deep here because I think it's going to be a good long-term buy, maybe not so much in the short term. Here's a few reasons as to why. So, an article was released by thestreet.com today titled Google Makes a Move to Take on Shopify, Amazon, and Walmart. And this actually isn't brand new news. This actually came out and Google announced this back on March 17th, so around 4 days prior to today. But it actually became more widely known this morning, and that's why I think the stock is selling off considerably. What is it that Alphabet is doing to cause Shopify to sell off so much? Well, when you consider this, over the years, e-commerce has gotten more and more efficient and demands have become more and more prominent, especially when it comes to delivery times. We look at how Amazon has evolved. When Amazon first started, the delivery times were around 3 to 5 days but by the time you ordered something to the time it got to your home. And then it increased to 2, right? Now Prime members were getting their free deliveries within 2 days of ordering. And now it's been reduced even further to certain items being delivered in the same day that you push that buy button. Walmart has also hopped on board, and a lot of their other competitors as well. This means that the drive or the demand for more efficient drivers to deliver packages faster is becoming more and more of a challenge. And this is where Google comes in. And it's a program that's called the Last Mile Fleet Solution. They claim it's not delivering for customers, it's helping companies that already have a fleet of trucks do a better job. This is a quote from Google saying, starting today, Last Mile Fleet Solution is available to help operators create exceptional delivery experiences from e-commerce to doorstep delivery. The solution allows your business to optimize across every stage of last mile delivery journey, capturing valid addresses, efficiently navigating drivers, tracking shipment progress, and analyzing fleet performance. Last Mile Fleet Solution provides reliable infrastructure that scales with you as your business grows, all with predictable pricing per delivery. It builds on one of our existing mobility solutions, on-demand rides and deliveries, which is used by lead ride-hailing and on-demand delivery operators around the world. So essentially what's being said here is that Google is going to be helping these delivery drivers get out there more efficiently so they can compete with the likes of Amazon and, you guessed it, Shopify. And the street goes on to say that Google isn't reinventing the wheel here. It's leveraging an existing expertise and maps to help delivery drivers be more efficient. They have features such as embedded turn-by-turn navigation, detailed delivery locations and traffic data to perform, to better outperform estimated time arrivals, improved routing and in-app navigation to help drivers with their daily work. This is great for the little guy, for the smaller businesses that have products that they deliver on their own so they can compete with the big dogs like Amazon and Shopify. And so it's interesting to me because when we look at how all the other e-commerce platforms have moved today, just off of this article that came out from the street, the only one that really is being impacted that much is Shopify. Now, I think that there's a couple of reasons for this. One of them in particular being that Shopify is still really overvalued despite the move down. I mean, let's just take a look at this chart here. You can see this is the daily chart just from November 19th of 21, which conveniently enough was when Omicron was announced the day after Thanksgiving. And then it just continued to fall down further in this crazy downtrend, going down as much as 80%. We've seen a little bit of a bounce back, and some could argue that perhaps this is maybe a change in direction for the company, but we're still not over the 50-day moving average, and the 200-day is still way up here around $1,300 a share. Now, I wouldn't call this a trend reversal yet until we do get up to over at least the 50-day moving average, and then the 200-day is certainly going to be important as well. Obviously, the trend looks like it could be breaking here, but it has to sustain, and today's action definitely has me nervous. Here's one other thing that's worth considering here. Shopify, believe it or not, is still overvalued when compared to something like an Amazon, Etsy, or some of the other e-commerce platforms. The price to sales ratio on Shopify is at 18 times. That is a ridiculous multiple considering that Amazon's is just at 3. Not only that, but the earnings multiple is also quite insane here with trading around 182 times next year's earnings. When you compare that to something like an Amazon, it's at 66. And I would even argue that Amazon is a little bit more expensive, but I think we know that Amazon can grow into that multiple. I think Shopify has the ability to grow somewhat into that multiple, but that is a ridiculous price to be paying for an e-commerce platform when you do have other ones out there such as Etsy that's trading at around 40 times next year's earnings and still is a little expensive when it comes to price of sales around 9, but still not anywhere near compared to what Shopify's is. But there is a caveat here, and I still like Shopify regardless of where it's at. But before I get into some of those factors, make sure you're hitting that thumbs up if you're enjoying the video so far. I certainly would appreciate it. So it's not all bad news for Shopify. They have an impressive track record of growth, and that's why businesses and hedge funds are willing to pay a premium for something like Shopify because they are growing so fast. Trailing 12-month revenue is up 4,000% since their IPO, which outpaces some of the FANG stocks like Alphabet. Now, they have an estimated 1.75 million merchants on their platform, bringing in around $3.3 billion, which is an amazing number, but it still pales in comparison to something like Amazon, right? The growth story, however, that 4,000% growth story over the last 6-7 years has been extraordinary regardless. The other reason why I like this, especially long-term, is because not only the growth, the reason why they're growing, and that's because Shopify has minimal direct competition. And I know when I say that, some people are going to be like, well, wait a minute. Didn't we just talk about Amazon being a huge competitor of theirs? Yes, they are. Walmart, Amazon, Target, Mercado Libre, even some of those other e-commerce platforms, Etsy, they're all going to be competitors. But the way that Shopify designs their business is so different, and it kind of sets them apart. And that's why they've been able to do so well, especially as they've been able to help small businesses. They're kind of on the back end, such as a Wix or a Squarespace. We have a Squarespace website at ownthechaos.com, but you wouldn't know that it was a Squarespace website, right? And that's how Shopify is able to kind of have the upper hand or have that competitive advantage compared to something like Amazon or Walmart. And this is why the Google News is so impactful for something like Shopify. Shopify has those types of services that provide deliveries for those small businesses. And if that gets taken away because of Google, that certainly can significantly damage some of the growth there for Shopify, especially for something that's trading at such a high premium. But let me know what you guys think in the comments below. Is Shopify still a buy for you regardless? Just considering how much this has come down, do you think it's still overvalued, or would you rather buy something like an Etsy or Amazon over Shopify? Let me know why or why not. And guys, don't forget that I'll see you tomorrow at 3:45 p.m. Eastern time to go live to get my reactions on the overall market and whatever might be reporting earnings that day. That's going to do it for me. I'll see you in the next one.